House of Property podcast. I'm Simon.
And I'm Simon.
I've been investing in property for over 20 years, and if you're an active landlord or planning your next property investment, this podcast is for you. And I'm joined today by Simon Glastonbury, who is an independent mortgage broker with 25 years of experience, providing mortgages, bridging, and development finance for home buyers and investors. Now, when we had a little chat before we started recording, Simon, I think the word you use to describe the current property market is fine. It's fine. I'm not sure I'm putting quite the right emphasis on that, but I'll let you do that in a second. So we thought we'd start off discussions today with what is the property market waiting for? And maybe it's the budget that's coming up. Maybe it's the next Bank of England base rate cut, which might happen in December, maybe not, or maybe we're just waiting for Christmas. I don't know. What do you think, Simon? Where is or what is the property market waiting for?
Well, great to be back again, Simon, and that's the burning question we've all got at the moment. I mean, really, what are we waiting for? What's the market? First of all, what's the market like? And that's why I sort of shrugged my shoulders. Yes, it's fine. You had the wonderful Russell on your podcast a few weeks ago, and he said, and I picked up on the word fine, and I agree with him wholeheartedly. It's a difficult market, I think. I was interested to note that he seemed to think the stats, and I can only go by what Rightmove are saying at the moment, that the number of first-time buyers in the market it's average, and what they would expect, whatever average is. I think the figure was something like 400,000 in the year. We're not seeing that now. You know, we're a smallish brokerage. We then speak to bigger networks, bigger companies, bigger brokerages. They're all seeing very much the same thing. They've seen a lack of first-time buyers in the marketplace. Now, without the first-time buyers, we're just not. The market is just not going to have that spark I believe it needs. There are a lot of very high-end properties on the market which can't move, and if you haven't got the first-time buyers, you can't just expect a cash buyer to come in and move. They are around, of course, very few and far between. Yes, you're probably if you're looking at the £5-10 million plus range, but that's at 1% of the market. If you're looking at the general market, the question everybody has is, as you said, what's going to move? How is it going to go from fine to good, or from fine to better? I think the budget.
Fine to
fine. Sorry, yeah, fine. Let's not go to great, but good would be good enough at the moment. I think we're waiting since the leak, this famous leak from the government about potential mansion tax, let's say. And I think I tried to dig around for the term mansion tax. Where did that come from? I'm sure it's just a media term. No one actually said it's a mansion tax. My feeling is it will be a semi-detached in the southeast tax, and something larger. So everybody needs to be prepared. And I think that's why it was leaked out anyway, because to prepare everybody and say something's coming. Then it was announced a few days ago to say that there's a potential income tax rise as well. That's on the cards. They've got to raise the money somewhere. We've all got to put our hands up and say, right, okay, it's got to come from something. So what's that going to do? I think people are waiting. Mortgage rates are really, really good. Don't be wrong. They haven't changed very much since our last, and we will go through, as we usually do, and have the roundup at the end. They're good. Lenders are lending. Lenders are really trying to move the needle with regard to promoting new products out there. HSBC have gone 6 times income for their Premier account clients. So they're trying to move the needle on this. They're trying to lend the money. We're not having. They are being flexible. That is something we're definitely seeing. Clearly, they need to lend the money. That's why they're being flexible. because they want to lend, and it's only that will creep into banks will have targets from year to year, January to December. They do every year. As soon as December comes, they're going to up the targets again. They don't. Very few corporates then reduce targets the following year. We can all see that. So again, they're going to. How are we going to do it? Everybody knows that there needs to be a kickstart in the market. What is it? May just be they're waiting for Christmas. I probably don't think that is the case, but I think it's going to be the budget. I think the budget, as soon as it's over, I'm not expecting great things out of the budget. I'm not sure what it will be, but when it does happen, I think that will definitely kickstart.
So you think it's more about everyone just holding their breath for the budget rather than what might or might not actually be in the budget. You don't think that'll have too big an impact. It's just the fact that it's done and people can breathe again.
Yeah, I absolutely. I think that absolutely that's the case. Once it's over and going, well, there it is now. Well, that's what it is. Now let's deal with it. It might take a little bit of time to sink in if there's anything too complicated. So potentially a change from stamp duty to this house tax. I'm not calling it a mansion tax. It's ridiculous. House tax. Maybe that's it. Maybe it's capital gains. We don't know. People will then get to grips with it. Someone will immediately come out, and certainly we will, if there's some sort of change, to try and get our heads around it, and make sure everybody's very clear on what it is. As soon as they do, right, okay, well, let's move again. Because there's no real reason why not. Inflation is kind of where it is. It isn't going mad. GDP isn't going mad. We're expecting, again, we are now expecting a rate drop in December. Big hints in the marketplace for another rate drop in December. Now, again, said on this many, many times before, and we've had the conversation, that doesn't correlate directly to to fixed rates, but it will have a knock-on effect. So the interest rates, which are the best ones, are just below 4%. They're not immediately going down to 3.5%, but you will have some knock-on effect. So it will bring more rates below the 4% mark, certainly in the residential side. And on the buy-to-let side, they will get closer to the 4% mark, which is really good for all of us. And if we know, as we've known, for people who have been in the property market for many years, over 10, 15 years, a 4% interest rate is really good. It is historically really good, and you can work out and you can budget as an investor. You can budget around the 4% mark. Great. We'll all have that. And I think if that's the outlook, we will go from fine to good.
Well, let's hope we can. There have been so many rumours about bank rates going down, and it seemed every I was going to say every month, but it's not quite every month that they have the meeting. But every time they have the meeting, those rumours circulate in advance, and sort of I think it's sort of people willing it to happen, and so many times it doesn't. And I think last meeting it was a 50-50 split almost on the sort of board that decides. So hopefully, maybe that will actually happen in December. But I think even when that does happen, it'll probably be another 0.25% drop or something. The next time the Bank of England meets, there'll be all these headlines again saying, will the bank be dropping again? Will we get another base rate cut? Yeah. And do you think that's just going to go forever now until we're back down at stupid rates, or probably not? Or do you think people will actually be satisfied at some point?
Oh, absolutely not. I don't think we're ever satisfied, are we? That's it. And it gives us something. It gives us great content to discuss, because it affects everybody. And the main thing there is it doesn't affect you too much when it comes to the fixed rates at the moment. These small drops don't. But of course, as they build up, they do. If it keeps dropping 0.25%, but I just can't see it dropping very much further. We're really, really not going to go back down to rates at 0.25%, 0.1. And then fixed rates of about, around 1%. It's just not that. There is nothing, absolutely nothing to say it's going to go anywhere near that, and gives us no reason to. Looking at that, really, where is it going to go? What are they trying to do? What are they trying to achieve by that if they keep dropping, which they're clearly not going to? I expect a drop in December to go to 3.75. I don't think it's going to go any further. I think that's kind of where we're going to be. I think that's where we're going to be with fixed rates for the foreseeable. I think they will then have a look to see how that affects the marketplace. Does it affect the property market? Does it affect any number of different things? As we know, they're widespread. So I think that's kind of where they are. But we will still have that conversation because people will look on that day, won't they? And there's a big announcement. The Bank of England has said, oh, no, they're not doing anything. And then it's yesterday's fish and chip paper, isn't it? It makes no difference. And we carry on with our work. But I think that's kind of where we are. My feeling, that's where we are, unless anything obviously dramatic happens with the economy. And also we are obviously, it's that big, it is a little bit of a sticking point at the moment, isn't it, with the budget? Because we're all kind of waiting. We don't know what's coming, but it's not what we do know. It's not going to be good news. And I don't think it ever has been. I can't remember a budget where I've been jumping up and down and say, "Boy, that was great." But they're very aware that the property market needs some sort of boost. No one wants it to be fine. And that's the thing. Certainly with people, with people putting their properties on the market, they've been sitting there for a long time. As we sort of touch on a bit, but the valuations are a little bit skewed at the moment. So we want things to move. You certainly don't want things sitting there for a long time.
Yeah. The longer something sits there, the more people are uncertain about paying whatever is being asked. Yes,
100%. Yeah, absolutely. You want it off your books, and I think it was a stat you brought up previously, and how long properties or property sales going through. We're noticing property sales are taking a lot longer at the moment. I could pretty much hang my hat on the fact that it would be 3 months or 12 weeks, pretty much to the day from start to finish. And from when the offer goes in, and you got to build into that. This is when, at the moment, mortgage offers are coming out in 10 days, 2 weeks. They're really quick at the moment.
Yeah, that's good.
There's different reasons, and of course, different lenders have different criteria. And if it's a tricky one, then it may take longer. Some are quicker. Valuers are going out really quickly. The mortgage offers are coming in very, really quickly. The solicitors, for whatever reason, the legals are taking a lot longer. So that 3 months is going to 4 months and can be longer. Why is that? Things have seemed to be stuck in legals. Now, is that process? Is it because they're overworked? Well, overworked in a very flat market is a worry, because if it does build up and does pick up, what do we expect then? It's going to be really, really slow, because they're just not going to have the capacity to work it. So that'll be an interesting dynamic, and to see how that's great. We want it to pick up, but we've got to be able to process everything through. Otherwise, it goes through. Yeah, my solicitor's ready. Well, no, sorry, my solicitor's still 2 months behind. You could have a lot of that as well. But that's, I suppose, is it a nice problem to have? It's not a nice problem, but it may be a problem we have to face, unfortunately.
Yeah. I wonder if at least some of those delays, and I've certainly heard some examples of this, but I don't know how widespread it is the delays are caused by waiting for searches to come back. And of course, a lot of the searches are done by local councils. And of course, a lot of local councils are very cash strapped at the moment, and have probably sacked half the people who used to do these searches. So I suspect it could all be sort of connected, that everyone's sort of run out of money. The government bodies at various levels have run out of money, and hence it all sort of filters through gradually and ends up clogging everything up.
Yeah, absolutely. But they've got to be careful. The government clearly know the amount of money they make from stamp duty alone. And that's without all that. I mean, you can go far and wide, can't you, with the property market, be it solicitors, mortgage brokers, estate agents, then builders, and it goes far and wide, doesn't it? And so all of the tax they're getting from everybody in that, it's a huge sum of money. The single one, obviously, being stamp duty. So they want this to work. They want this to happen. You know, they'll be fools not to. And everything indicates they do. They are looking at this. What it will be, let's see. I mean, look forward to our next conversation. Yeah, let's hope we're cheering rather than crying is probably the way forward.
Yeah, I mean, as with almost everything, I think in government, there's a bit of a balancing act to be had, because if they push the property market on, then you've got all the property owners saying, "Yay, my asset is increasing in value and it's amazing," but then you've got all the first time buyers saying, "Oh my goodness, I can't afford anything."
Yeah.
So the alternative is you put the sort of brakes on the property market, a bit like we've got at the moment, and then all of the existing property owners are saying, "Oh my goodness, how terrible! My largest asset is not going up in value or losing value even, or whatever it might be." But gradually, maybe the first time buyers are starting to say, "Oh, I can afford a property," but perhaps we haven't quite got there yet. So perhaps we've got the brakes on, and we're disappointing all the current owners, but we haven't quite got to the point of making the first time buyers happy.
Yeah, I think that's it. But I mean, there are a lot of first time buyers definitely. I mean, out there paying huge sums of money on rental, and clearly with the interest rates as they are, can not halve their monthly outgoing, but certainly make a big dent in it. I mean, you've got to then take into consideration where you've got maintenance of the property and you've got different things within the property because it's your responsibility. But you then have hopefully an asset to your name, a growing asset. So that people are then, and as you know, I mean, you're looking at it yourself. I mean, rental properties, people are able to put rents up. Now, I know the renters' rights bills come in, and that may change things and whatever. But if you're, if you're an experienced or a professional landlord, you can still put these things up in a relative amount and still make have a profitable business. So, but if you're a tenant, it's a different matter, isn't it? So I think they're pushing. I think it's a balance. You're absolutely right. They've got to get it right. Do they? Will they? Let's wait and see. I hope so.
So we think it's probably the budget mostly that everyone's sort of holding off for, and maybe a little bit of interest rate drop, and maybe that'll come in December, but then that might be it for quite a while. But overall, I think the message is that we're hoping for more first time buyers for Christmas. Is that right?
That would be absolutely, yeah, that'd be fantastic. An interesting point, actually, something which hasn't come in, which is usually around this time, or not when a market's like this, is people the talk of, it's quite interesting, the talk of property crash, or price crash or price correction. That isn't around at the moment, which is great. If we're in this kind of feel within the market, that is usually a bit of a buzzword or a term which is thrown around all over. Oh, it's because we're waiting for a correction in the market. Don't hear that anywhere. And I'm with that. I don't see one. I don't see there isn't any reason why there should be a correction in the market. If you look in a lot of areas, even in London, actually, in central London, it's fairly flat. And actually, London has come down. If we're seeing down valuations at the moment, which we're seeing a lot of, certainly in the remortgage market, you're seeing the London properties in particular being downvalued. Now, whether they were, and it's always the argument that the value was too high in the first place. Okay, fine. Or they think, yes, it's worth 2 million. Well, it's actually not worth anywhere near that because you've just made it up. But whatever the figures are and how many zeros you want to put on it, with London, we're certainly noticing a lot of down valuation. So, but we're not seeing a correction in the market. So I don't think that will have a knock-on effect at all. But certainly down valuations are a thing in the marketplace. So secondhand, maybe it's a long way around of saying, well, maybe that is a slight correction. Maybe valuers are being told, keep a lid on the prices. We're seeing down valuations on purchases at the moment, which is very awkward conversation. As you know, negotiating with a vendor over price is always very sticky. I know we're talking about, I often say it's monopoly money, isn't it? You're saying, people are saying, oh, well, I'll knock 10,000, I'll knock 20,000, I'll knock 50,000 off the price. It's a huge amount of money. Huge. Absolutely. If you had that cash in front of you, you'd think you've won the lottery. So, and you just throw those figures out there. But everybody does it. Everybody does the same thing. But we're seeing that quite often at the moment. We are mostly southeast. One of my team is southwest, seeing exactly the same thing. We're all seeing down valuations. We're all seeing down valuations on a daily basis. So maybe that's a slight correction. But we see that. We've talked about it before. We do see it. It does come in periods where you see that. And I would expect now, I've been doing it long enough to have, maybe we'll have a month of it. Maybe this will be leading up to Christmas. Maybe that is a correction. I don't know. But that may also have a knock-on effect. I mean, it doesn't have a direct correlation between that and the mortgage and the market or the property market as such, because you don't know that a down valuation is going to happen, obviously, until you've actually gone through the process of buying or starting the process of buying anyway. But it does have a knock-on effect to other properties, obviously, in your road if they're not valued up as what expected.
Yeah. On the correction front, I think at the moment, I mean, looking at the sort of nationwide figures, so not nationwide the company, wide of the nation, the width of the nation, whatever. And they're sort of, as you say, flat in the southeast, and then just a few percent further north. But they're all, I think, below inflation at the moment, so the annual increases in property prices. So it may not be that we're in sort of crash territory, but effectively the value of property is very slightly, very gradually falling. And people aren't generally noticing too much. But I think actually, maybe I'll take a slightly different approach. Looking at some of the data that I see through PATMA, it looks like the rate at which property reductions are coming through onto the market is slowing at the moment. So for quite a while, there's been 21% of the market seeing a price reduction every month. And that seems to be going down at the moment, even though anecdotally, I still seem to be seeing price reductions all the time on properties around me in my area.
Yeah.
So I don't know if perhaps that's a southeast versus elsewhere thing, but I'm intrigued that maybe asking prices are not dropping quite so much, at least on a national level. And maybe even people are agreeing to buy at higher levels, but then the valuers are saying, no, I don't think so. I think you're overstretching a bit there. So have you seen an increase in down valuations in the last month or two, or has it just been consistently high for a while?
No, it's the last 6 weeks. Definitely, there's been a big increase, and the last 2 or 3 weeks, definitely, we've really noticed it. And that's a really good point. It could be people are agreeing the price, and also think you can. It's statistics and damn lies, isn't it? It's how you want to work them. I think estate agents are very clever now. The terminology used when you're looking at a price guide price. What does that mean? Absolutely anything, that doesn't it? Does it mean you want £300,000 more or £300,000 less? So, I mean, what's it? A guide of what?
Yeah.
I mean, it historically you would have a price, and you would start negotiation from that price downwards. That's what you used to do. Um, and then it would occasionally be offers over or offers in excess of. At least you knew where you stood. Well, I'm not going to bid for that because I want to come down, not up. At least you knew.
Yeah.
Guide price is bizarre, and you have got no idea. I think I think that the terminology of guide price should change completely, because it gives no idea what a guide price. What are you looking something upwards or downwards? I mean, so you're right. I mean, if you're using that, that may be just a way of getting around it and skewing the figures slightly. I don't know, and does that anyway. But certainly, we're going into now, and we're seeing purchases of whatever figure. We are noticing more in London. So, in and around London, London is definitely being affected. Whereas historically, they were London. If you were at a London postcode, certainly central London, you were untouchable. Now, definitely not. That is not the case, and they are being affected more so with property down valuations, on purchases. Certainly, in our experience, and again, that has gone out. That is wider, so it's not just our company. We're seeing this with speaking to other brokers in and around the area, all getting the same thing. And again, like I said, it's a very awkward conversation to have, because people have set their heart on it, they want to, and now we're saying, well, sorry, it's not worth what we've offered you. So therefore, they've got to come up with more deposit. They've got to come up with the same, or they renegotiate. And once a vendor's negotiated on price and you've agreed to it, going back to them and saying, oh, actually, it's been downvalued. We're only paying that now. Difficult conversation. So it's interesting on the statistics you've used. It could mean any number of things, couldn't it? But like you look in and around your area and what is being reduced, or I've got lots and lots of different pockets of areas of Rightmove that I use and I take data from, and they all seem to be going down. All of them. Properties are not, and it's very interesting, the market at the moment. Where is selling? And what areas? And again, a really, really difficult question to answer at the moment. There isn't any rhyme or reason a particular house is selling immediately, or a particular house will sit on there for 8 weeks and not get any people coming through the door. It's very strange.
Yeah, just sort of what catches the eye of the market, or
Yeah, absolutely.
Is that down valuation issue affecting remortgages as well as purchases?
Yeah, absolutely it is. Yeah, and you'll generally find when you have this period of down valuations, you do get the feeling that the valuers will try their best to value a property on a purchase at the asking price. I don't know. They obviously have to be independent, and so they should be. It is a lot easier when it looks at a remortgage valuation. A lot of the lenders are going towards automated valuations on remortgages anyway. We are seeing a lot more of those. And again, sometimes that happens, sometimes it doesn't, but they're going more towards automated valuations. Does depend on loan to values, etc. But that's can be really useful. But physical valuations, when they're going out, we're seeing a lot of down valuations on remortgages, and also we're going through a period with a buy to let, and then let's just say you have a rental valuation of £1,000 a month. Well, if they don't believe you should be getting £1,000 a month, they will knock that down, which is really hard to take, because we know, if we're being in the industry, we know that 9 times out of 10 you can put rents up, not as much as you like, but within reason. You can put a rent up fairly high and you will get a tenant. There's very, very few rental properties sitting around like sales properties. They're up there, and they've got people knocking on the door to buy that. So you can put the rental up as a landlord. You can put the rental up. So having that knocked down, which then is a knock-on effect where you can't lend as much, because we talked through stress testing before.
Yeah,
that's frustrating. And don't get me started on going back to appeal a valuation, because that in reality just doesn't happen. The valuers do not like being told they were wrong in the first place. And it's extremely, and I mean, I cannot emphasize enough, extremely rare you would get a valuer to turn around and say, no, I was wrong. Yes, you're right. Let's increase that up because that will make you happy. It does happen, don't get me wrong, but very, very rarely.
Yeah, quite. It must be very difficult when you're remortgaging a property, especially an investment property, which often people would sort of run at 75% or maybe even 85% loan to value if they could. And sort of for the last decade, you might have remortgaged every 2 to 5 years, and when you've done that, it take extra capital out because the price has gone up or the value has gone up, should I say. So you might have stayed pushed up against that upper loan to value limit. And now, if you're seeing a down valuation on that property, do people actually have to stump up some cash to be able to remortgage? Or
Yes, in theory, if they want to do that. So if you've done, you're exactly right. So if you've remortgaged your property 2 years ago, you think, oh, can I move lenders? Because they've got a really good rate. Most lenders, as you do, if you're standard, let's just say a residential or a standard personal buy to let, the lenders will offer you a free legal and free valuation service. So it doesn't cost you anything as such to move over. Maybe an arrangement fee, a broker fee or something. Now, if you move over and the value is down below what you paid to or what is valued at 2 years ago, yeah, your option is to pay the difference. Or you look at a rate switch with your current lender, which is sometimes either not even an option. If you want some of the specialist lenders, they don't offer that service. Not that many, but certainly some of the smaller lenders still don't offer a rate switch service. What do? Your only option can be, and we've had it, where your only option can be is to pay some a lump sum into the mortgage. Some people just haven't got that. Simply isn't when they're expecting. So you're right. Yeah, that does happen. So that's why, certainly on investment properties, 5-year fixed rate is probably a little more sensible. So you don't have that issue coming up quite so quickly. But it's got to suit you, whatever the rate is and how the term of that rate has got to suit you at that time. A lot more 2-year rates are being given out at the moment or advised on, recommended. A lot more than I've seen over the last probably 10 years. People are looking, again, reason why is the expectation rates will come down within the next couple of years. I think people are hoping they are, rather than looking at the numbers and the statistics to say what really is going to happen. But with the rates below, being quite sensible and below 4%, then it kind of makes sense.
Okay, right. Well, with that little scare of perhaps having to stump up cash to be able to remortgage, or being stuck on a existing lender rate that may not be quite what you're looking for, let's move on to our current rates roundup. So we always do this every time Simon joins us, and we look at a few different rates, and we normally start off with looking at a sort of residential home owning rate, and then we move on to buy to let and HMO after that. But yeah, what is the current rate looking like on a normal residential purchase, Simon?
Well, normal residential, it's 75% at the moment. Like I said, it sort of touched on this already. You're looking at just below the 4% mark. So 3.89, best 2-year out there at the moment, 3.93 for a 5-year. So the correction hasn't finally come where 2-year rates are slightly below the 5-year rate now, which is really good for people out there. So expect for people to pay at the moment at a 75% and below loan to value, below the 4% mark. So 3.89, that's really good. I think the interesting thing at the moment, it doesn't go up that much. You take a jump to 90%, and you're at 4.25. That's not a huge difference in the marketplace with only a 10% deposit. So again, I think that's really good money and it's very positive for for the marketplace going forward. And I think that certainly shows from a lender's point of view. They're out there, they're trying to be competitive, they're trying to lend the money, but they have the people to lend the money to. So I certainly think on a residential side, rates are competitive. They're very good. Let's see what happens with the next Bank of England meeting, and let's see if that then but I think that will come down again. It will have. It's not going to have a complete. Again, I said it over and over. If we get a 0.25% cut, it's not going to have a 0.25% cut on the fixed rates. It doesn't generally happen like that, but it will have a drop. That's a good thing, certainly. So yeah, that's some good news on the residential side. On the buy to let, they are still out there. They're still out.
With this is going to be the silly fees, isn't it?
We love them. We're still not doing them. I've got no idea who's actually buying these things. But with a personal buy to let, you're only really looking at these if you're remortgaging. So there is a 2.2 rate out there. For a 2-year fix with a 7% fee. I can't see any reason why anybody would go near that. But to give you an idea, 3.88 with a £1,500 fee, that's pretty good on a buy-to-let. Really, really good. 4.07, £1,500 fee on a 5-year. Good. They're good rates. Yeah. Now, again, like I said, you're unlikely to go for that anything near that on a purchase. If it's purchase, it's going to be limited company, with reasons we know about. But again, limited company, you're looking best value. Really, it does depend on the loan size, of course, but best value at the moment, 4.79 with a £1,500 fee. Limited company buy to let, think that's pretty good. There are lower fees. Lower rates, but they come with big fees. So be prepared there. Yeah. Still, big in the market, what we're finding, HMOs, limited company name, 4.82 with a 1% fee. Now, that again, with HMOs at the moment, they are big, certainly within our business, they're really good. They're good business. Experienced professional landlords seem to like them a lot. They don't like the headaches that come with them. That's one thing. But because of the rentals so good, getting up to the stress testing is very, very it's very unusual that they don't meet the stress tests on an HMO. Yeah. If you can go with the headache of having lots of people and lots of ASTs and living in your house, and then it's good business. And the rates are fairly good. They've certainly come down. I mean, from what we've talked about probably over the last year or so, they've definitely come down. And personal buy-to-lets, for one, if you're looking to remortgage, it also helps on the stress testing as well, of course. The interest rate helps on that stress testing. So if people out there have had problems with remortgaging buy-to-lets, look again, continually look, because we are seeing that lenders are trying to help out, which is only good news for the market and only good news for us.
Yeah. That HMO rate is so close to the limited company buy-to-let rate. It's and if you can put up with the extra hassle.
Yeah, absolutely. Yeah, it's and people are. I mean, we're seeing it. We may have just had an influx of people trying to look at HMOs, but with the licensing and depending on what area you look at that very closely. People are just going in, putting up small extensions on the back. All of a sudden, it's not a 3-bed, it's a 6-bed, and the rental's very, very good. If they're looking at that rather than a long-term, it's a different conversation, but a long-term sort of capital growth, it can be very, very good. It is a lot of work, though. Be prepared.
Indeed. Well, for everyone listening, if you would like to get some more fine-tuned advice on your finance needs, your mortgaging, your bridging, etc., then Simon's contact details will be in the show notes. So please have a look there and reach out and get in touch with him. And just remains for me to say thank you very much for joining us today, Simon.
Pleasure as always.
And I will be back to speak to everyone again next time.